What's up, guys? In this video, I'm going to be explaining the opening week range report on edgeful.com. So in this example, we're going to be looking at crude oil. We're looking at the New York session in the trailing 1 year. So one thing I want to just start off, I want to say that we're looking at the New York session, which means we are looking exclusively within these blue boxes, the New York session from 9:30 to 4. So how did I get these blue boxes on here? We have these TradingView indicators. You can request them right here. So you just put in your TradingView username, not your edgeful email, and you find your TradingView username by clicking right here. Mine in this case is edgeful. You're going to put in yours. It is not going to be your TradingView. It's not going to be your edgeful email, and you'll automatically get assigned all of our TradingView indicators. We have over 20 of them right now. We have a bunch more in the pipeline, so make sure to take advantage of those. The one I'm using right now is the market sessions one. So what this allows you to do is see with an outline of the high and low and start and end of each session. So let's talk about this report, opening week's range. What is this measuring? What does this do? This report looks at, right now we have the Monday to Tuesday customization selected, which means it looks at the high and the low created on Monday and Tuesday. So the higher high between Monday and Tuesday, so this is Monday and Tuesday here. You can see that Tuesday made a higher high, so a higher high than Monday, so I'm going to mark out my line right there. I'm going to check, okay, Monday made the lower low. So you can see this, if you were to collapse these days together, the high was made here, the low was made there. So now, right here, we're looking at that, Monday and Tuesday high and low. You can see that we broke the opening week high. So we broke this high 44% of the time in the last year on crude oil in the New York session. Now, we broke the opening week low 34% of the time, so a little bit less. We've broken both sides only 20% of the time. So what happened this week actually, in this case, this was last week, this actually did break both sides because it broke here and it also broke here. So this is a lot less likely to happen. And then most importantly, this is the one that I really like to focus on, is that only 2% of the time prices stayed within this range. So you definitely want to be targeting at least one of these levels to be hit, which is the high and the low made between Monday and Tuesday. So the customization here that we have is it allows you to switch the range that you're looking at. So if I switch to Monday, you can see here that now if you just change this to Monday's range, which in this case is pretty close, but you can see that it breaks both sides. The rest of the week will break both sides of Monday's range 42% of the time. And 0% of the time in the entire last year has it stayed within Monday's range. Now let's look at Monday through Wednesday. So now what this is looking at is the high and lows made from Monday to Wednesday. So here, so now I'm looking from Monday to Wednesday. Where is the highest point in the New York sessions? Right here. Where is the lowest point? Now this changes down here. So you can see that only the high, I'm going to just zoom in here a little bit, only the highs have broken from Thursday and Friday, because we're using the Monday to Wednesday range to set the high and the low. Now we only have 2 more days to allow for the break to happen. So you can see that only the high broke in this case. Price never retraced back to these lows on Thursday or Friday. So you can see that 46% of the time you can expect the highs to break, 26% of the time you can expect the lows to break. And then in this case, you can expect a little bit more for price to stay within this range. So price to kind of range within these 2 lines. Let me find a different example here so we can just run through one new example. So now let me find my Monday. Now let's just do this together. So I'm going to go back to that customization of just Monday, Tuesday. And then I'm going to go here. I'm going to look at Monday and Tuesday. So what I'm going to do again is mark out the high made between those 2 days, which is right here, and mark out the low made on these 2 days. And you can see that price clearly broke only the high. So in this case, that would fall into this category. Then it didn't break the low, so the chances of it breaking the low are obviously lower. Then in this case, it didn't retrace back down, so it didn't do one of these. So it would not fall in this category. And then again, very, very unlikely that price stays within this range. So let me show you what that would look like. That would look something like this. It would not break out above this high or below this low. Very unlikely, so you want to be targeting either the high or the low. If this sets up, opening in this New York session, you want to be targeting a break of the high. Obviously, you don't want to be targeting a break of the low when it's very close to here. So that's what this report is. We have a little explainer graph right here. We have some more explainer text right there. Then we have some more explainer text. Obviously, this video is going to go right here. But if you have any questions, please reach out to our support. It's hello@edgeful.com. This report is something that a lot of traders have found very useful just to kind of frame their week. And again, if you want to request our TradingView indicators, just click on this button right here and you can get all of our indicators and then all the future ones that we release as well. So please, if this video was helpful, like, comment, subscribe. We appreciate it a lot, and don't be shy to ask any questions. Thank you.